Crisis in the Middle East brings crisis for the apparel industry. The global apparel industry is currently going through one of its most difficult periods as it confronts a growing wave of uncertainty driven by the escalating Middle East crisis. What initially seemed like a contained geopolitical conflict is now evolving into a much broader economic shock. For Bangladesh, where the ready-made garment sector contributes over 80% of export earnings and employs around 4 million workers, the implications are both immediate and deeply significant. One of the most visible impacts is in the energy market. The ongoing conflict has already pushed oil prices up, and projections suggest that prices could go much higher. For Bangladesh's apparel manufacturers, this directly translates into rising production costs. In addition, shipping and logistics disruptions are intensifying the crisis. Due to the conflict, many shipping companies have suspended operations, rerouted vessels, or faced sharply higher insurance costs. Consequently, global supply chains are slowing down, with delays, congestion, and rising costs becoming increasingly common. The inflationary impact of the crisis is equally concerning. At the same time, food and commodity prices are also rising due to disruptions in fertilizer and energy supply. This environment is already affecting consumer confidence in key export markets. In the United States, for example, consumer sentiment dropped by 6% in March 2026. Reflecting growing concerns about household finances and the overall economic outlook. Retailers are beginning to report weaker demand, and major global brands have warned that a prolonged conflict could significantly reduce purchasing power and slow sales growth. For Bangladesh, this means fewer orders, tougher price negotiations, and increased competition among sourcing destinations. Early signs of this slowdown are already visible. Apparel exports from Bangladesh to the European Union, its largest markets, declined by more than 25% year-on-year in January 2026. This suggests that the industry was already facing weakening demand even before the full effects of the crisis began to unfold, placing it in a particularly vulnerable position. Given this context, the risks facing Bangladesh's apparel sector can be understood across three interconnected areas. First, rising energy prices are increasing production and transportation costs, which in turn reduces profitability and competitiveness. Second, ongoing business disruptions caused by shipment delays, fuel shortages, and logistical uncertainty are undermining reliability and delivery commitments. Third, declining consumer demand driven by inflation and reduced confidence in key markets is putting downward pressure on both export volumes and pricing. At the same time, these challenges also create an opportunity for strategic transformation. At the government level, priorities should include strengthening energy security through diversified sourcing, increased investment in renewable energy, and improvements in LNG infrastructure. In addition, financial support such as low-interest working capital loans, export incentives, and temporary tax relief will be essential to help manufacturers manage rising costs. Trade diplomacy can and will also play a critical role by ensuring continued access to key markets, negotiating favorable trade agreements, and exploring new export destinations, particularly in emerging economies. Bangladesh can reduce its dependence on traditional markets that are currently experiencing economic slowdown. For the private sector, building resilience will require a focus on efficiency and innovation. Investments in energy-efficient machinery, automation, and digital supply chain systems can help offset rising costs. Equally important is the need to move up the value chain. In a context of weakening demand, competing solely on price is no longer sustainable. As a result, greater emphasis on product diversification, design capabilities, and sustainable manufacturing will allow Bangladesh to capture higher value segments and maintain stronger relationships with global buyers. Finally, collaboration across the industry is very essential. The Middle East crisis is not just a temporary disruption. It is a broader stress test for global supply chains and existing business models. For Bangladesh's apparel industry, the way forward lies in turning vulnerability into strength through strategic adaptation, effective policy support, and collective action. The choice made now will shape the industry's ability to navigate not only this crisis but also the uncertainties of an increasingly volatile global economy.